Well, welcome to another video in the VWAP indicator series. And as I'm sure you know by now, the VWAP Pro indicator is in fact 5 indicators in one, of which the VWAP itself is the foundation, if you like, of everything else. And that stands for volume weighted average price. I promised to record a video with different instruments. So far we've looked at stocks, an ETF, and now we're on the Emini futures contract. And really the only difference here is, perhaps if I click open the 20-minute time frame here, just move that up a little bit there. The only difference here is that the VWAP, as you probably recall, resets at the start of every new session, which in terms of stocks would be at the physical exchange. You might have the pre-market or the pre-market open. But in terms of an electronic contract such as the ES, which runs 24/7 on Globex, the session restart, if you like, is here at the start of the new day. So that's where all the data reverts back to the start, and the VWAP indicator starts its calculation from that point. So really, that's the only difference. And as you can see here, other than that, as I say, we're on the 20-minute time frame here. The center line is the VWAP itself, the volume weighted average price. And clearly we're in quite a strong uptrend and were for much of the day. The outer envelope here is our one standard deviation to the upside, and we've got the same to the downside. And it's really just focusing on where the price action is, where it's revisiting, its relationship to the outer envelope. As you can see, it was a very steady climb throughout. And then, of course, at the bottom here, we are very much focused on the volume profile associated with any such moves. And as you can see, we've got, in very simple terms, in VPA 101, we've got a rising market, we've got the volume declining, and then we've got this price waterfall developing on rising volume. So we know that's a decent move. And then at this point here, we get stopping volume coming in. So we've got a whole host of buying coming under that particular candle, and therefore it's no great surprise to see the index ping higher off that particular stopping volume, the buyers coming in there, the market makers and big operators. So it looks exactly the same. It works in exactly the same way. The only difference, as I say, is the starting point, if you like, the reset point. And as these are electronic contracts trading 24/7 on Globex, then the reset point is at the start of the new session, which is the overnight at midnight, if you like. So that's on 20 minutes. Let's just have a quick look over at some of the other time frames down onto 15. Let's just resize that for you so it looks a bit more sensible. There we go. We've got this lovely rally up here, bouncing off the outer envelope here of one standard deviation. Then we get up the top here. So we've got the volume falling away here. So it's no great surprise to see this come to a pause point and a rollover into rising volume, which is nice to confirm. Nice 2-bar reversal at the bottom. So we're expecting a rally off that, which is indeed what we get. And we close over here in a congestion phase. So it's really all there, and it's used in exactly the same way, whatever the time frame, whatever the instrument, it is exactly the same. And as I say, this is the core, if you like, of the indicator. This is the VWAP, very much an intraday trading tool because it resets every day. So it's very much about intraday day trading, whether you're on stocks, whether you're on ETFs, whether you're on index futures. It doesn't matter. As you can see, it works in exactly the same way, and all supported by volume, which is the trigger for our getting in, staying in, and getting out as always. And really, that's it. Let's have a quick look at the 5-minute just to round off there. And just to highlight the revisiting aspect, I've mentioned this several times. The AVWAP it has this magnetic characteristic where the price revisits all the time, and I've explained in the introductory videos why that is. So you will see this a lot. It's very similar. The analogy I've used elsewhere is very much like the VPOC, another volume-based indicator, the volume point of control, where price is very much in balance at that point because you've got the heaviest concentration of volume. Well, here it's very much in terms of price dictating the magnetism, or if you like, of the VWAP, and how the price revisits this and bounces off it. So that's the way to use it. It is very much using the outer envelopes of the standard deviation to the upside and the downside. They very much act as both support and resistance, depending on which way you're going. And then, as I say, you will get a lot of this revisiting back to the VWAP itself. And of course, it's all underpinned by the volume price analysis, which is the trigger to help you make those all-important decisions to get in, helping you to stay in, of course, and then where you want to close out, whether we're up here at a potentially overbought situation, or whether we get down here to a potentially oversold situation where the stock or the index or the ETF, whatever it may be, is considered cheaper, and up here where it's considered to be more expensive. So there we are. I hope you've enjoyed this particular video. Lots more to come as always. We'll run through all the other variants of this particular indicator as well. So thanks for watching. See you soon, and bye for now.